Bitcoin breaks down below key support, suggesting the next leg down may have started. Alt layer ones also get whacked, and vol markets barely react as realized vol remains quite low. All this and more in this week's Crypto Insight. The crypto this week, Bitcoin breaks down. So if we look at the chart here, we were saying the key level there was a bit of a confluence of support around that 41, 42K area, right? And that was the level that we needed to hold if this kind of rally was going to carry on up towards this kind of 52K area that I saw as like ultimate resistance in this move. That broke down quite violently. And now it looks like that's opened up the way to 38K as the next major support. Okay. And the sell-off's been quite impulsive, right? So as I was saying, the choppiness of the rally that we had since January was not very impulsive. That sort of drop that we've just seen is quite impulsive. So that kind of smells like that larger degree sell-off that we were talking about that may not be complete yet. We may be resuming that sell-off basically, right? And really your tell is going to be how we react at 38K. If we bounce strongly off that, then maybe this chop is extended and continues. If we break that, then we've probably got quite a violent move coming because that larger degree correction, it seems to be on still. Now that also kind of plays into the idea that, it's probably unlikely that we're going to see that strong bounce if risk assets are under pressure, right? Because the Nasdaq's obviously, feeling heavy with the rates move. And it does look like the correlation between Nasdaq and Bitcoin is about as high as it's been in years, if not ever, around 60%. So I don't see Bitcoin really escaping that. If we think the Nasdaq over the next few months, at least, maybe not weeks, but next few months is headed lower because of all of the things we mentioned, then it looks like crypto probably goes with it. Okay, that's kind of my base case. Okay, so that's Bitcoin. Now Ethereum also rolled over, which was annoying because I was looking for it to go higher because I had those call switches on. So unfortunately, it hit this kind of 36 area and then it just rolled over about 15-20%, right, in short order. It is parked at this level, kind of the 100-day moving average, also a lower Bollinger Band, and also a bit of a retracement of that rally. So there's quite a few confluence at levels there to suggest it might bounce, and it has managed to stage a little bounce here of like 3%, but nothing too exciting. There was also some chatter about the merge being delayed from Q2 to Q3 or 4. So that didn't help. But the relative performance between Ethereum and Bitcoin is kind of intact, right? So you see here, we had the breakout. It's not doing too badly. It had a bit of an intraday blip down there, but it's hanging in there on a relative performance. It's just the absolute levels are all selling off, which isn't doing us any favors, right? So that's the problem when you do those type of call switch trades and you don't do a futures spread. The future spread would still be up as much money because you've got the future spread on and it's performed. When you've got those calls versus calls, you kind of need the absolute levels to go higher for those things to go in the money. And unfortunately for us, that hasn't played out. You've also had other layer ones getting drilled a bit. So you had Solana giving back 20-odd%. You had Luna down 25, AVAX weak as well. So all of those layer ones seem to just be a higher beta version of what the large caps are doing at the moment. That idiosyncratic bid that Solana caught on the back of the OpenSea integration seems to have evaporated pretty damn fast. But if cryptos are heading lower, don't expect any love from those layer ones, right? Those layer ones are going to be a high beta version of Ethereum, I suspect, in the short term. Over a longer term time horizons, once we have more time to innovate and new things to happen in the space, clearly those things can outperform. But in the short term macro impulse, they ain't going to escape, right? We had a Solana call ladder on that we kind of bought a little bit of upside against. Obviously, that went from hero to zero. That was looking quite sweet as well, in sweet spot, earning its carry. Solana's come back down to 108. I mean, we're still in that trade. I've got it expiring on Friday, but it's a 120, 130, 140 call ladder. So I'm not holding my breath on that, but we'll see. If we do stage a bounce, which would surprise me, then that one could still work. But the good thing about these call ladders and stuff is they're pretty low premium bets with high leverage. So even when they don't work out, you don't lose too much money, right? Because the amount of premium that you dedicate to those low premium bets is generally quite small. Yeah. And that risk is quite well contained. So that's kind of what we're seeing in Ethereum and Bitcoin. Now, the other big sort of thing last week was the Miami conference, right? So Bitcoin 2020 conference in Miami. That's what crypto investors were kind of focused on, kind of ignoring the price action and more bothered about what's happening in the space. The main takeaway really seems to be this excellent growth that you're seeing in the Lightning Network. So let me just quickly see some questions come through on the chat. ETH merge, from what I heard, has been targeted for July. Recent testing is supportive. Okay, that's good to know. So they haven't pushed it back too much. In July, they'll say September and September. Yeah, I mean, they do have a bit of a track record for pushing back, right? So I'm kind of in Aaron's camp there, right, where it probably does get pushed back, right? But anyway, yeah, cheers for that, Adam. Anyway, so the other kind of bit of good news is the Lightning Network, right? So the growth in the Lightning Network seems to be pretty steady. They've partnered, and the integrations and partnerships have been announced with various crypto companies, applications, and people are investing capital into that, basically, right? So that's a strong positive that's been coming, that's come out of the conference. If you see here, this chart from NYDIG is showing that growth. So go back to Jan 2020, you had that acceleration through the summer of last year, and that trend seems to be continuing, right? And then the other positives that came out of the conference were, it sounds like Portugal are relaxing capital gains taxes on Bitcoin. And then you're also seeing a Mexican senator pushing for more national adoption, right? Who knows if it's going to go as far as legal tender like El Salvador, but it's good to see countries talking about adoption on a more national scale, basically, right? So those are the positive kind of narratives coming out of that conference. Yeah. Okay, the next thing to talk about is going to be the on-chain metrics. Okay, so what are we seeing on on-chain metrics? So I've got a few charts here. These are Glassnode put out a comprehensive report, so it's worth you guys, looking at it yourselves, but these are my main takeaways. So we've got low transaction fees and activity, right? Which isn't particularly bullish, right? It doesn't show like this strong new entities coming into the space, this strong demand that's going to sustain a bull market. So that's not great. But you are seeing a very high hash rate, right? So the hash rates are all-time highs, and miner revenues are 150% higher than they were in May 2020. Okay, so that's kind of saying that there's an incentive for miners to keep doing their thing. That's kind of that's adding robustness to the network longer term, but there's an absence of activity on chain, basically, right? Which suggests that you're not going to without that, you're not going to get this accelerated kind of rally, basically, right? So that's what I'm saying. Even if we do get a rally up to 52K, till we start to see significant pickup in that sort of activity, then it's probably not sustainable, right, in the short term. So that's one thing. Then we've got the long-term holders. Obviously, long-term holder supply is quite high, but the 13.66% of them are in an unrealized loss. Okay. So that's the kind of light blue part of this graph here on the right. And all it's saying is, if you compare that to previous drawdowns, how far have long-term holders let themselves go into loss, basically? How deep are the pockets of long-term holders in previous downturns? And you can see that, there's been points in 2018 and 2020 where 35% of the supply has been held in loss, okay? So all that's illustrating is that the long-term hodlers have got very deep pockets, right? And we're nowhere near a point where we have even reached in previous bear cycles. So that's quite encouraging, right? These guys aren't, likely to need to, puke their holdings at these levels, basically based on past behavior, okay? So that's kind of my takeaway from that chart. Then you've got realized losses on the bottom left. You know, they haven't really spiked. So we've seen an uptick in profit taking, right? But we've seen a decline in loss realization. Okay. So profit taking obviously keeps a bit of a lid on the market, stops it from accelerating higher, right? But profit taking isn't panic selling. Okay. So they're usually a bit calmer when they're taking profit on the sell side. Okay. But, you know, we haven't seen this large spike in taking losses. And what I'm looking for is that kind of at some point between now and the summer, we get this acceleration to the downside where we complete this larger degree correction and we see a nice big spike in realized losses where we can feel like, yes, we've had the washout. People who need to puke this have puked it. Everyone else is in the long-term game. They're going nowhere and we can buy it basically, right? And that's the foundations for a stronger rally, right? But for me, we haven't seen the pain yet from people taking losses, and that remains to be seen. And I think will be seen at some point in the summer. Yeah. So those are my key takeaways from on chain. Okay. Now, if we look at the volatility space and what's going on there, realized volatility, not as much of an uptick as you might have thought, right? So definitely had a little bit of an uptick after the sell-off yesterday, right? Obviously, Bitcoin down more than 5%, Ethereum down around 8%, I think it was. But you can see here, implied's caught a bit of a bid. So the pink line is implied. So usual kind of DOV selling into last Friday. You know, you had them compress. So you had both the lines kind of sitting on each other in Bitcoin, not much difference there. And now Bitcoin implieds have popped as we started to break down and there's been a bit of demand come in. Ethereum implies actually overshot and we're trading below realized briefly. And now they're kind of more in line. But you can see that pink line just slightly below the blue. That's the 7-day. So that's telling you weekly gamma in Ethereum is actually still trading below realized, trailing 7-day realized, which suggests that, you know, Ethereum gamma looks like good value here if you are going to be buying any gamma in crypto, basically. That looks better value than Bitcoin does. Whereas the Bitcoin, obviously there's some implied versus realized spread there in the order of magnitude of 10 volts, basically, right? So that's what the kind of realized metrics are showing us. If we then look at kind of what the curves have been doing, you know, you had a very steep contango last week as realized was low and implied was tracking it. So you had the blue dotted lines, very, very steep. Weekly vol was trading on its knees. Now you've had that pop. So you can see the curves aren't quite inverted because we need to see a bit more sustainable realized more than just a day flash in the pan. So curves are still in contango, but less than they were as the front end has had a bit of a pop right after yesterday's move. You can also see that on the time series showing the different maturities. You can see, you know, we were much wider in terms of the spread between all these lines and we kind of crunched, but we haven't crunched to the level where they've all clustered like they did, you know, over a week ago. That's when the curve goes completely flat. So still room for it to go flat and even inverted if we were to get a significant breakdown. If we broke below 38K, I'd probably expect that curve to go inverted. Might not stay there for very long, but I'd expect some sort of inversion to come out of that, right? So kind of keep an eye out for that. So that's kind of term structures and what they're doing. If we then look at skew, that's been quite interesting. You've had Bitcoin skew repricing. So on the left chart, you've got Bitcoin skew. So about a week ago, we were much more neutral, but you've had a significant, consistent move towards puts. No real surprise there as the market's been breaking down. People come in and bid for puts, so puts catch a bid. So all the short end maturities are down there about 6 to 7 vols puts over, which is reasonable for the 25 delta risk reversals. And then even the longer dates, right? The 6-month stuff has repriced from what was about 0 down to about 3 vols for puts over. So longer dated skew, even catching a bid there. I've been saying that was my preferred way to kind of get protection because I thought that put was that skew was very cheap and the macro risk was evident there. So I thought that opportunity made sense. So that seems to be working. So until we get some real sort of bullish price action back in crypto, you know, we may well see that longer end kind of staying that way and trending down towards the others as more macro risk gets priced into markets, right? The chart on the right is obviously Ethereum skew. You can see there that hasn't really repriced in the same way, right? And Ethereum skew has had a bit more sellers around, right? So you've had the absolute level of vols higher. So people just looking for macro protection are probably going to look to the thing that's got the cheaper vol, and they're kind of saying, well, Bitcoin and Ethereum are going to sell off together in a macro risk off, so I'll just own the cheaper one. So that's why the flows kind of gravitate towards Bitcoin downside. You also had the positive, and the outperformance of Ethereum recently, adding to the bullish narrative there. So people have actually been selling puts in Ethereum in the short end, like in April, and that's kind of what you're seeing there, basically, right? So Ethereum not really catching as much of a put bid as what Bitcoin is, because that's being used as the risk off hedge right now. Yeah. Okay, so that's skew. And then if we finally have a look at what these block sniffers looking like. So bringing up the Bitcoin flows, what are the main flows we saw over the last week? So I've highlighted here, we saw some April strangle selling. So decent clip went up there in April, 38K, 49K strangles. So, realize it's been super low. That's the systematic kind of premium earning type mentality. How can I earn my carry? I'll sell April strangles, right? And expect the market to stay range bound. So that was kind of a theta hunting trade. You saw a bullish December call buyer in a decent clip there. That's the red bar. That's December 80K calls being bought. So those were kind of the flows we saw at the start of the week. But as the market's been breaking lower over the weekend, we've seen put buyers come in, and the maturities that they're coming in is May and June. So there I've highlighted there, we're seeing the 30K, which strikes we see 30K and 35K strikes being bought in May and June, basically, right? So that's that bid to vol that I've been talking about in the front end. That's that buying flow is really kind of driving that, basically. Yeah, and obviously some short covering from people who are short gamma as well will kind of help that front end pop. Yeah, so those are the main flows we're seeing in Bitcoin options. If we then move over to look at what the Ethereum options are doing, call spreads being bought, so bullish again with that absolute level of vol being a bit higher. People kind of go more towards call spreads than outright calls. So we saw June 4,000, 5,000 call spreads as a bullish trade. Like I said, we've seen some April put selling. That was in the more local vicinity of kind of 3,000 to 2,800 put area. And then we did see a little bit of put buying come in as well as the market's been rolling over. Saw those May 26s going up in decent size. So again, it seems to be the consensus forming is that, yeah, May to June is going to be a tough period for crypto markets in a macro risk off. We might not melt down immediately in the next few weeks, which is why people are happy to kind of sell April or maybe sell April puts. And then longer term, September, December, those type of trades are the bull trades, right? The call spreads and calls are coming in that sort of maturity. So that's the options landscape is kind of painting that picture basically in crypto, where you've got, maybe we're kind of going to grind our way throughout April. If we do get a big down leg, then it comes in May, June. And then once we come out of that towards the end of the year, we're a bit more bullish basically, right? So that's kind of what I'm seeing there. The only other thing that I would mention is QCP put out a nice little report, as they always do on a weekly basis, just talking about their flows and stuff. And they mentioned that a lot of the DOV flows are concentrated on the call side. So there's about a 5-to-1 imbalance between DOV call selling versus put selling, right? So that also helps explain why skew is more bid towards puts than calls, because there's that supply of calls coming to the market from DOVs and there's less of it coming on puts basically, right? So just something to be aware of and something I thought I'd flag there basically. All right, and that's it from me on crypto this week. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.